Yes, very good afternoon. Right, so what is clause 6, part 1, second schedule? Fails to report a material misstatement known to him to appear in the financial statements where he is concerned with such financial statements in a professional capacity. Clause 2, part 3, first schedule. Does not supply the information called for or does not comply with the requirements asked for by ICAI and or its functionaries. 1111 engages in any other business or occupation other than the profession of chartered accountancy unless permitted by the council so to engage, provided that nothing contained herein shall disentitle a member from being a director unless he or his partners are interested in such a company as an auditor. Yes? Yes, if he permits his name to be used in connection with estimate of earnings contingent upon future transactions in a manner which may lead to the belief that he vouches for the accuracy of the forecast. Accepts or agrees to accept any part of fees, profits or gains from CA, lawyer, agent, broker, customer by way of commission or gratification. Right? Clause 2, part 2, first schedule. Right? 712. Does not exercise due diligence or is grossly negligent in the conduct of his professional duties. Right? Then solicits client or professional work directly or indirectly by circular, advertisement, personal communication, interview or by any other means, provided that nothing contained herein shall be construed as preventing or prohibiting a member from applying, requesting, inviting, securing professional work from another CA in practice or responding to tenders and inquiries issued by various users and organization of professional services from time to time and getting professional work as a consequence, right? Yes, in any IFRS information form, return or statement to be submitted to ICAI and or its functionaries provides particulars knowing them to be false. Okay. Yes, in the opinion of the council, brings disrepute to the profession or to the institute as a result of his action, whether or not related to his professional work. Fails to obtain sufficient information which is necessary for expression of opinion or its exceptions are sufficiently material to negate the expression of an opinion. Periodicals and magazines 812. Right. Contravenes any of the provisions of this act or the regulations made thereunder or any guidelines issued by the council. Right? Now you tell me the clause, part and schedule for NOC. 811 accepts position as an auditor previously held by another CA. Yes, without first communicating with him in writing. Yes, percentage contingent basis fees. 1011 charges or offers to charge, accepts or offers to accept in respect of his professional employment any fees which are based on percentage of profits or which are contingent upon the results of his findings or of such employment except as permitted under the regulations under the act. Yes, fails to disclose a material fact. 512 fails to disclose a material fact known to him which is not disclosed in the financial statements but disclosure of which is necessary in the financial statements where he is concerned with such financial statements in a professional capacity. Right? Disrepute? 241, in the opinion of the council, brings disrepute to the profession or to the institute as a result of his action, whether or not related to his professional work. Separate banking account? Yes, fails to keep monies belonging to his client other than fees or remuneration in a separate banking account and to use such monies for the purposes intended by the client within a reasonable time. Tell me the 5 fails in part 1 second schedule. Tell me the 5 fails over there. There are 5 fails in part 1 second schedule now. Fails to disclose a material fact, then fails to report a material misstatement, then fails to obtain sufficient information, then fails to invite attention to material departure from audit procedures, and fails to keep monies belonging to his client in a separate banking account. So these are the 5 fails, no? And 5, 6, and then 8, 9, 10. Right? Fails to disclose a material fact, that is the provident fund will come over here. Fails to report a material misstatement, fails to obtain a sufficient information, fails to invite attention, and fails to keep monies belonging to his client in a separate banking account. Okay. Right? Then which is the clause for signing? Yes, clause 12, part 1, first schedule. First schedule, part 1, the last clause over there. Okay. Right? And then after that, yesterday we started with CARO 2016, in which we first studied the applicability of CARO 2016, which says that CARO shall apply to every company, including a foreign company, except possible. Private limited company not being a subsidiary or a holding of a public company, having paid up share capital and reserves and surplus not exceeding 1 crore as on the balance sheet date, and total borrowings from banks and financial institutions not exceeding 1 crore at any point of time during the financial year, and total revenue as disclosed in Schedule 3, including revenue from discontinuing operations not exceeding 10 crore during the financial year. Then one person company, small company, Section 8 company, insurance company, and the banking company. Right? So for a private limited company, for CARO not to be applicable, all the 3 conditions should be cumulatively satisfied. Paid up share capital, reserves and surplus 1 crore or less. Total borrowings 1 crore or less, and total revenue 10 crore or less. Even one of the condition violated and CARO becomes applicable to the private limited company. Very important, we saw that in paid up share capital, equity preference both included, and also the debit balance in profit and loss account is always to be considered. Then in the total borrowings, even the CC limit, overdraft, the outstanding dues in respect of credit card, and bills purchased and discounted, bills discounted with the bank, all banks, financial institutions put together is to be considered. Interest accrued and due to be considered, but interest accrued but not due not to be considered. Then for revenue, we saw that total revenue also includes the other income, sale of goods as well as sale of services. Sales from discontinuing operations are also to be considered. Net of excise, yani ke excise is to be reduced. Excise, sales tax, VAT, whatever it is, that is to be reduced. Trade discount to be reduced. Sales return to be reduced. But cash discount, commission given to third parties is not to be reduced. And reporting on CARO applies only to the audit of the standalone financial statements. This does not apply to the auditor's report on the consolidated financial statements. And then yesterday we had seen clause 1, clause 2 and clause 3 of para 3 of CARO 2016. Yes, clause 1 was regarding the fixed assets, under which we had 3 points. Whether the company is maintaining proper records showing full particulars, including quantitative details and the situation of the fixed assets. 2, whether these fixed assets have been physically verified by the management at reasonable intervals, and any material discrepancies noticed on physical verification, have they been properly dealt with in the books of account. And the third one is a new entry over there. whether title deeds of immovable property, are they held in the name of the company? If not, provide the details thereof, right? So that's the title deeds of immovable property. Are they being held in the name of the company? Yes, title deeds for immovable properties. So for that you need to check the sale deed, the lease deed, the transfer deed, the conveyance deed. Then you also need to check whether the property is under dispute, whether the property is getting transferred, whether the property documents have been lost or so, or whether property has been mortgaged with the bankers or so. Right. Then after that we came to clause 2, which is regarding the inventories. Again, inventories, same point of fixed assets ka second point. Right, where the inventories have been physically verified by the management at reasonable intervals and material discrepancies noticed on physical verification, have they been properly dealt with in the books of account. Then after that, clause 3, which was regarding loans to section 189 parties. Whether the company has granted any loan, secured or unsecured, to companies, firms, LLPs or other parties covered in the register maintained under section 189, then 3 points. 1, whether the terms and conditions are not prejudicial to the company's interest. So for that you'll check the rate of interest, the security offered, the repayment schedule. Then second one, whether the repayment schedule of principal and interest has been stipulated and whether the receipts are regular. And if the amount is overdue, then state the amount which is overdue for more than 90 days and whether reasonable steps have been taken for the recovery of the principal and interest. Right, so it's only talking about loans given, not loans taken from 189 parties, only loans to section 189 parties. Right, so what was clause 1? Fixed assets. What's clause 2? Inventories. What was clause 3? Loans to section 189 parties. And then we have now clause 4, which is regarding the LIGS. What is LIGS? Loans, investments, guarantees, securities. Are they in compliance with section 185 and 186 of the Companies Act 2013? So one thing if you notice in this CARO 2016 is that in out of the 16 clauses, in many clauses, they are telling the statutory auditor to check the compliance with the sections of the Companies Act. At the end, we'll prepare that summary, you know, okay, on which all clauses of CARO do you need to check compliance with the provisions of the Companies Act. So what does it say? Whether loans, investments, guarantees, securities, are they in compliance with section 185 and section 186 of the Companies Act 2013. Now section 185 is regarding the loans given to the directors. Yes, and 186 is regarding the guarantees, investment securities, the intercorporate investments which have been made, you know, with, and you can, more or less you can call it as transactions with related parties. And 185 and 186. Again, now this is, we have seen this from the viewpoint wearing our legal chashma. Now we need to take off the legal chashma and now we need to wear the auditor chashma. Now auditor chashma will check what? You know, there is one requirement of the section 185, 186. You cannot make an investment in a subsidiary company through more than 2 layers of investment company. Those of you who studied 185, 186 will be able to make more sense out of what I am saying. Others, when you study law, it will make sense to you. So there is one requirement over there, you know, okay, say if I want to, A Limited want to invest in E Limited. You understand? So what A does first, it invests in B. Then this B, it invests in C. Then this C, it invests in D. And then finally this D, it invests in E. So what obviously ultimate kya hai ki A is only investing in E, no? You know, but A invested in B, B gave it to C, C gave it to D, and then D gave it to E. Are there more than 2 layers of investment company in between? Yes, so that is not allowed. Right, so one thing as an auditor which you need to check, there are not more than 2 layers of investment companies. As an auditor, we have to think, na, because 185, 186 does not allow more than 2 layers of investment company. If there are more than 2 layers, then we'll say company has not complied with the provisions of 185, 186. Then they also talk about the rate of interest for the loans which have been given. And it says the rate of interest for the loan should not be lower than the government rate. है ना, that 5-year rate, 3-year rate of the government, it should not be lower than the government rates which have been prescribed. So again, rate of interest for the loans is not lower than what has been prescribed. Now which chashma I am wearing and seeing all this? The auditor chashma. Okay, the investment is not through more than 2 layers of investment company. That the rate of interest which has been charged is not lower than the rates which have been prescribed by the government. Then after that, if you've exceeded the limit of investments, and if you've exceeded the limit of the loans to be given or of the investments to be made, then whether for that a special resolution in the general meeting has been passed. You understand? So if you're exceeding the limits for the loan, there is a limit regarding how much loans, investments can be made. Up to a particular limit, the power has been given to the board of directors. You know, board of directors, you can do the investment. But beyond that, it requires a special resolution in the general meeting. So exam में अगर question आ गया कि what are the reporting requirements and what are the audit procedures, then this is what you have to write. The auditor should ensure that the investments in these subsidiaries is not through more than 2 layers of investment company. That the rate of interest which has been charged for the loans is not lower than the government prescribed rates. That if the loan investment amount exceeds the minimum, the limit, then in that case, whether a special resolution has been passed in the general meeting. And again, what reporting will I do in Caro? If I have to do the reporting in Caro, then what all reporting I will do? One, that the company has complied. And if not complied, then I'll make a table of this one. It more than 2 layers of investment company, yes. Lower than the prescribed rate of interest, yes. Special resolution in general meeting not passed, yes. Yani I am highlighting all the non-compliances. So that will be the reporting which will be done by the auditor. Right, so very important you remember these 2 layers of investment company. Rate of interest should not be lower than that is prescribed, and if it exceeds the limit, then the special resolution in the general meeting. And obviously one extra point which I can write is written representation from the management. Then you have these MBP1, MBP2s. You know MBP? MBP1 is MBP for? It's for the meeting of the board and their powers. So you can again check those MBP1, MBP2 forms or so. Right, so that is one more point which I can write over here. MB verification of MBP1, yes, which is the meeting of board and their powers. Like for audit and accounts, audit and auditors, you have ADT1, ADT2, ADT3, ADT4. Do you know that? ADT1, ADT2, है ना? Those are the forms which are there for audit and auditors. Just for this meeting of board and their powers, what are the forms which are there? MBP1. Yes, meeting of board and their powers. That is the form MBP1. And a meeting of board and their powers. Okay. Right. So if I look at this clause 4 in the books, in respect of loans, investments, guarantees and securities, that is why I call it as LIGS. What is LIGS? Loans, investments, guarantees, securities, whether the provisions of section 185 and 186 of the Act have been complied with, if not, provide the details thereof. And you have to provide the details if there is non-compliance. So again, what are the procedures you will follow? Obtain from the management the details of the directors or any other person in whom the director is interested. So obtain the list of the directors and the interested parties. Then check the details of the persons covered from MBP1 and the register maintained under section 189. Right, so again you can check the section 189 register. Then obtain and check the details of the transactions carried out with such persons, including any guarantee given and security provided. So what does it say? Obtain a list from the management. Second, it says check it from MBP1 and the 189 register, and then check the transactions. That is for section 185. Then for 186, what does it say? Obtain the details of the loans given to any person or any body corporate, guarantee given or security provided in connection with a loan to any other body corporate, and securities acquired of any other body corporate by way of subscription, purchase or otherwise made during the year, as well as those outstanding as at the beginning of the year. Yani they are talking about the LIGS. And loans, investments, guarantees, securities. Right, so obtain the details of all of them. Then at any point of time during the year, if it exceeds the limit of 60% of paid up share capital, free reserves and securities premium, or 100% of free reserves and securities premium, whichever is higher, special resolution in the general meeting. I've told you this point. If it exceeds the limit, Then what do you need to check in that case? The special resolution in the general meeting. Check whether the company has made investments through more than 2 layers of investment company. So one point I told you what? Special resolution in the general meeting. Second point, what did I tell you? More than 2 layers of investment company. Then whether the company has disclosed the full particulars of the loans given, investments made, guarantees given or securities provided in the financial statements. Then check whether the company has passed the board resolution as prescribed and obtained the prior approval wherever required from any public financial institution. Then whether loan has been given to a company registered under section 12, then again obtain a certificate of the statutory auditors. Then next point is again very important. Check whether the rate of interest is not lower than the prevailing yield of 1 year, 3 year, 5 year or 10 year of the government security closest to the tenure of the loan granted. So one important point I told you, special resolution in the general meeting. Second important point, what did I tell you? To more than 2 layers of investment company. And the third point which I told you, lower rate of interest. You know, very much looking at the trend of the question being asked in November 16 exam, they picked up the clause 12 when they asked, no, what are the reporting and what are the audit procedures? So very much we expect a question on this 185, 186. And the moment those examiners' eyes, they see more than 2 layers of investment companies, special resolution in general meeting, lower rate of interest, they'll come to know that you've studied. Because again, you don't write down the legal provisions. Don't sit in the exam hall and keep on explaining what is 185 and what is 186. What did I tell you? You have to look at it from the viewpoint of the auditor. See, everywhere it's like vouching verification. Na? They're saying obtain, check, 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 check. You understand? They're telling you to verify. Right. Then if the company is in the default in the repayment of any deposits, then again whether such default is subsisting and maintained a register as per MBP 2 in the manner as prescribed and the compliance of other provisions and the relevant rules. Right. So if you look at it, my God, this looks very huge, no? If you look one page filled in your books, looking at the description of the audit procedures of 185. But in a nutshell, if I had to put it, this is how I could put it. And not more than 2 layers of investment company. Yes, rate of interest is not lower than the government prescribed rate. Then if they've exceeded the limit of that 100% and 60%, then whether special resolution has been passed in the general meeting. And then they've said auditor should verify MBP 1, MBP 2. And if I just want to add one more, I can write add the verification of section 189 register. And a verification of section 189 register. Right, so those are the audit procedures. So that is a new entry in CARO 2016. Up, okay. Yes, that is a new entry in CARO 2016, clause 4 of CARO 2016. The earlier 3 clauses which we studied were there in the old CAROs also. And a fixed assets, inventories with little bit change here and there. And a loans to section 189 parties. But this is like a brand new entry. And a grand new entry, LIGS, loans, investments, guarantees, securities. Are they in compliance with section 185 and 186 of the Companies Act 2013? Is that okay for everyone? LIGS 185, 186? Okay. Then after that, now I come to clause 5. Has everybody written down this? Yes, mainly the green part. You know what I have written in green ink. Has everybody written that in your books? Or maybe you can put a post-it also in your books. That full page is there, na? वहाँ पे एक ये post-it लगा दो. Entire CARO is R raised to 10. So CARO is like upcoming area. I told you, na? It's latest. If you go now in the mall, so there is tags over there, na, that this is under 50% discount and this is new arrival. So this is new arrival. Right? Done everyone? All books you've written? No? You're going to start writing now? Oh, then okay. Right? Okay. Next after that we come to clause 5 of para 3 of Caro 2016. Para 3 of Caro 2016 is constant. So what is clause 5? Clause 5 is regarding the deposits from public. Right? Clause 5 is regarding the deposits from public. Right? So you're not a banking company. You're not a non-banking financial company, but still you're accepting deposits from the public. So can a company accept deposits from the public? Yes, it can. You know, there are some guidelines to be followed. Like say Infosys. Infosys, is it a banking company? No. Is it a non-banking financial company? No. But still can it accept deposits from the public? Yes. So now, in case if the company has accepted deposits from the public, if it has not accepted deposits from the public, then very good. The clause is only not applicable. And if we continue to look at this annual audit report of Infosys of yesterday, what do they say? Clause 1 to we had seen yesterday only now. Right. Clause 2 के लिए क्या बोलते हैं? The company is a service company, primarily rendering software services. Accordingly, it does not hold any physical inventories. Thus, para 3.2 of the order is not applicable to the company. So, inventory not applicable. Then clause 3, the company has granted loans to 5 body corporates covered in the register maintained under section 189. In our opinion, the rate of interest and the other terms and conditions on which the loans have been granted to the bodies, yes, has been granted to the body corporate listed in the register under 189 were not prima facie prejudicial to the interest of the company. Then, in case of loans granted to the bodies covered in the register under section 189, yes, what does it say? The borrowers have been regular in the payment of the principal and interest as stipulated. So, combine kar diya sentence. It has been stipulated also and they are regular also. And there are no overdue amounts in respect of the loan granted to a body corporate listed in the register maintained under section 189. So, the 3 points which we saw for clause 3 are given over here. Then clause 4, in our opinion and according to the information explanation given to us, the company has complied with the provisions of, yes, have complied with the provisions of section 185 and 186 with respect to loans and investments made. And had they not complied, then you would have written, okay, you know, they've exceeded the limit, special resolution has not been passed, they've made investment through more than 2 layers of investment company, the rate of interest is lower. Had they not complied, then you would have done the reporting over here. Right, then clause 5, the company has not accepted any deposits from the public. So clause 5 also not applicable to the entity. But in case if the entity has accepted deposits from the public, in case if the company for which Caro is applicable, if they have not accepted deposits, the clause is only not applicable. But if they have accepted deposits from the public, then point 1, have they complied with, auditor you have to report this, have they complied with 1, the provisions of the Companies Act 2013, then the rules framed thereunder. The rules framed thereunder, you have the Companies Acceptance of Deposit Rules 2014. Then provisions of the Companies Act, you have section 73 to section 76. If by chance, if you know the old company law, you had section 58A, 58AA, which used to talk about the small depositors. You know, where the deposit amount could not exceed 20,000. Now here, what does it say? Compliance with section 73 to section 76 of the Companies Act. The rules framed thereunder and any RBI directives issued. Because see, as such, primary function of accepting deposits is going to be of a bank or of a non-banking financial company, which is a deposit accepting company. But you're not a bank, you're not an NBFC, but still you're accepting deposits. RBI says, wait, let me give you some directions. Wherever public deposit finance matter comes, RBI says, wait, you will also come under our purview. Right, so what does it say? In case if the company has accepted deposits from the public, then in that case, 3 things. Whether the company has complied with 3 things. Provisions of the Companies Act, the rules framed thereunder, and any RBI directions. Not complied. The above 3 or any out of the above 3 have not been complied. Yani ke that means there is a Contravention. You know, when you don't comply with the law, that's called as a contravention, no? That means there is a contravention. Then they say state the nature of contravention. This is new in Caro 2016. Old Caro तो क्या बोलते थे कि if there is a non-compliance, यानी कि if they have not complied, whether there is a contravention. अब क्या बोलते हैं, if there is a contravention, state the nature of the contravention. यानी कि say, you know, section 73, section 76 says that the depositors are to be repaid on or before the due date. And you've not repaid them on or before the due date. So that's a contravention. So you'll have to state the nature of contravention, that the company has failed to repay the deposits on the due date. Are you getting that the company has failed to repay the deposits on the due date? Not complied, that means there is a contravention. In that case, you need to first state the nature of the contravention. And any order passed, so say, you know, the depositors, the company defaulted in the repayment of depositors. So the depositors filed a case against this company. So any order passed by NCLT, RBI, court, tribunal, CLB, that's the company law board, company law board, at least whether the order has been complied with or not. तो बोले ठीक है, तुमने लॉ तो कंप्लाई नहीं किया तो इसीलिए कॉन्ट्रवेंशन हो गया. तो नाउ एन ऑर्डर हैज कम टू योर कंपनी. अभी एटलीस्ट ऑर्डर तो कंप्लाई किया कि नहीं, कि वो भी नहीं कंप्लाई किया. पहले तो लॉ कंप्लाई किया क्या? अगर लॉ नहीं कंप्लाई किया, और अगर इफ एनी ऑर्डर हैज कम, देन वेदर दे हैव कंप्लाइड विद द ऑर्डर. Say order may it has been given that you have to repay the depositor along with some penalty and interest. So whether you've repaid it to him. The depositor suffered any, what you say, loss because you did not repay the money to him. So you have to make good the loss which has been suffered by the depositor. So whether it has been made good. You understand? So order passed by NCLT, CLB, RBI, court, tribunal, at least whether the order has been complied with or not. Right? So what you have to remember? Two parts. One, whether if the company has accepted deposits, whether it has complied with the provisions of the Companies Act, the rules framed thereunder. We have the Companies Acceptance of Deposit Rules 2014 and the RBI directives issued from time to time. If complied, baat khatam. Not complied, that means there is a contravention. So pehle to state the nature of the contravention. And if an order has been passed by NCLT, CLB, RBI, court, tribunal, at least whether that order has been complied with or not. So what example I gave you? You know, section 73 to 76 would say that you need to repay your deposits on or before the due date. On the due date rather. You have to pay the interest which you've agreed. And if you've not repaid your deposits on the due date, so that's a contravention. So first you have to state the nature of the contravention and any order passed. So, you know, one of the depository filed a case against your company in the court that because they did not repay the deposit, I suffered so much of loss. And then the court passed an order that you have to make good the loss which has been suffered by the depositor. Then whether the company has made good that loss. Any order passed by NCLT, CLB, RBI, court, tribunal, at least whether that order has been complied with or not. Does everybody get that? Okay, right, so that is clause 5. What is clause 5 regarding the deposits from public? So again, as an auditor, what are the procedures which you will perform? Yes, what are the audit procedures which you will perform for the same? One, you will obtain a register of all the public deposits accepted during the year. Then if it's a private company, see, to some private companies also Caro could be applicable, na? Okay, but private companies cannot accept deposits from the public. They can only accept deposit from their members. So you need to check if it's a private company, the deposits have been accepted only from the members. If it's a public company where the deposits have been accepted from the public and offer for, what you say, accepting deposits have been made to the public. Say it's a public company and you're accepting deposits only from your employees, friends and relatives, then again that's not a public deposit. When will you call it a public deposit? When the offer goes to the public. So if you see an advertisement in the newspaper, an offer in the newspaper, then we will say that it's an offer made to the public. Right. Then after that you need to check the computation of the interest to be paid on the same. Then the internal control system in the organization to track the due dates for the repayment of deposit. Because they'll have to track, na, okay, what is the date on which the deposit was accepted, what is the due date, and on the due date it should be paid, otherwise it will amount to a contravention, otherwise it will amount to a default in the repayment of the deposits. So first you need to check the acceptance of the deposit, then you need to check the repayment of the deposit. Is everybody getting what I am telling you? First you need to check the acceptance, then you need to check the repayment of the deposit. Right, so acceptance, whether the offer has been made to the public. If it's a private company, then the deposits can be accepted only from the members. If it's a public company, then deposit can be accepted from the members, what do you say, from the public generally. Then after that, whether the deposit register has been maintained, the interest computation, the internal control system. Then after that, whether they have been repaid on the due date or whether there has been any default. And any order passed by NCLT, CLB, RBI court tribunal, whether that order has been complied with or not. To be frank, more or less in the auditor chashma, audit procedures mein, you have to write down these legal provisions, but only with the viewpoint of checking. Here what do we write? Check whether complied with section 73 to section 76. So in the procedures, what should I write? The auditor should ensure whether the company has complied with the provisions of section 73 to section 76 in respect of acceptance of deposits from the public. So there, like vouching verification, you have to convert it into audit procedures. Is everybody getting? Right. So because, again, direct 6 mark, 4 mark question in your exams is going to come. Somewhere in your question number 4B, Geo Limited has accepted deposits from the public during the year. What are the reporting responsibilities under CARO 2016 for the same? So that time you'll have to write down this entire story. In case the company has accepted deposits, whether directives issued by RBI, provisions of section 73 to section 76 or any other relevant provisions of the Companies Act 2013 and the rules framed thereunder wherever applicable have been complied with. Everybody, are you seeing it in your own books? Right. If not, the nature of such contravention to be stated. Now see, now they also want you to state the nature of contravention. And if an order, not necessarily always an order will be passed. If an order has been passed by 5 people, who are the 5 people? CLB, NCLT, RBI court or tribunal, whether the same has been complied with or not. Yes, are you seeing it? Okay, what does it say? The auditor, now I'm coming to the auditor chashma part. The auditor should examine compliance by the company with regard to all the matters specified in the section and the rules and not merely to the limit of deposits. So examine the compliance. He should examine the system by which deposits are accepted and records are maintained and make a reasonable test check to ensure the correctness of the system. So I told you 2 things, acceptance of deposit and the repayment of the deposits. I told you one, the acceptance of the deposit, and second, they are talking about the repayment of the deposits. Right? So what does it say? Examine the compliance of the sections and the rules. Second, examine the system for acceptance of deposit. Then also what does it say? To check whether the deposits remain within the limit. Then should inquire from the management about the instances of non-compliance and any order passed by the authorities specified. So any non-compliance and any orders passed. And where any such authorities, those 5 authorities, NCLT, RBI, court, tribunal, CLB, the auditor should examine the steps taken by the company to comply with the said order. If the company has not complied with the order, obviously the same is to be reported, stating therein the nature of the contravention and the fact that the not complied with the order issued. Yes, that is clause 5, which is regarding the deposits from public. Yes, clause 5, which is regarding the deposits from public. Right. Then after clause 5, we have clause 6, which is regarding the cost records. Right. Next one after clause 5 is clause 6, which is regarding the cost records. Okay. Right. Section 213, section 2, subsection 13 of the Companies Act 2013 has defined books of account. Section 2, subsection 13 of the Companies Act 2013 has defined the term books of account. Yes, later on when we go to company audit, we'll be again seeing this. But how have they defined books of account? It says, 1, all sums of money received and expended by the company. Matlab, cash book. All sums of money received and expended by the company. Matlab, cash book. All sales and purchases of the company. Yani ke the trading and profit and loss account, as you know. All assets and liabilities of the company. So we popularly know it as the balance sheet. And D it says, if maintenance of cost records have been prescribed by the central government under section 148 subsection 1, then also the company needs to maintain the cost records in their books of account. So who is going to prescribe the maintenance of cost records? The central government. Which are the companies which are required to include cost records in their books of account? That is going to be prescribed by the central government. We will study it in the list of, in the chapter of cost audit. Okay, so for those companies for which the central government has prescribed the maintenance of cost records under section 148 subsection 1 of the Companies Act 2013, whether such cost records have been made and maintained. Whether such cost records have been made and maintained. What do you mean by cost records? First thing, MLO, material labor overhead. Material labor and any other items of cost. Cost sheet, no? MLO, material labor overheads. So what does it say? Overall, are you going to do a detailed examination of the cost records? No. You are going to just say prima facie. And whether the cost records have been made and maintained. Are you going to check whether a cost audit has been done or no? No, nothing to do with cost audit. You know, say your cost audit was ordered, but cost audit has not been done. That will not come over here. Here, your reporting is restricted. Okay, whether maintenance of cost records have been prescribed by the central government, whether such cost records have been made and maintained. So you are not going to do a detailed examination. You are going to just do an overview. You are going to say whether prima facie the cost records have been made and maintained. तो कारो में कैसे है ना, स्टैट्यूटरी ऑडिटर को ऐसे एक्स्ट्रा काम आ जाता है. All extra work is given to the statutory auditor. Statutory auditor, fixed assets, physical verification, proper records, you check. Title deeds of immovable property. Inventory also, physical verification, discrepancy. Then loans to 189 party, that also you check. Now loans, investments, guarantee, security, whether Companies Act 185, 186 complied, you check. If they've accepted deposits, then also check, you know, provisions of Companies Act, rules framed thereunder, RBI directives have been complied. फिर अगर if they have to maintain cost records, so that also you prima facie check करके बोल दो, okay, whether such records have been made and maintained. Likewise, you know, all additional reporting, no? So the moment, you know, to a private limited company or a private company which becomes a public company, and the year where CARO becomes applicable to the company, the auditor has to increase the audit fees. Why? Because this also you check, this also you report on, this additional you report. Pehle in CARO, we also had two clauses, you know, internal control system and internal audit system. Both of those have been removed from CARO now. Why? Why adequacy of internal control system and adequacy of internal audit system both have been deleted from CARO? IFC, है ना? It has come in Companies Act only, 143(3)(I), wherein IFC ka reporting comes under Companies Act, and internal audit also now section 138, which is regarding internal audit. So now no need for CARO to mention about it. So earlier to CARO mein there was internal control system also, internal audit system also. But now why that has been deleted? Because that has been taken care of by Companies Act itself. That is why no need to put it in the CARO reporting. Okay, right? So what is clause 6? Whether the maintenance of cost records have been specified by the central government under section 148(1). What is section 148? Cost audit. whether such cost records, accounts and records have been made and maintained. So you have to remember these two words only, na? Made and maintained. Right, so what does it say? The company's cost records and audit rules has defined cost records as books of account relating to MLO. I told you, na, MLO, material, labor and other items of cost, as applicable to the production of goods or provision of services as provided in section 148 of the Act and the rules. These rules also prescribe the items of cost to be included in the books of account. The audit report has to report under the clause irrespective of whether a cost audit has been ordered. So this has got nothing to do with cost audit. Whether cost audit has been ordered or not, this is only talking about cost records. And are you going to do a detailed examination of the cost records? No, you are not going to do a detailed examination. I told you, na, prima facie, a general review of the cost records. Right, so that is clause 6, which is regarding the cost records. Right, so what was clause 1? Fixed assets. 2, inventories. 3, loans to 189 parties. 4, LIGS, loans, investments, guarantees, securities. 5, deposits from public. 6, cost records. And now coming to clause 7, which is statutory dues, which is ATF में top 10. Clause 7, which is statutory dues and which is ATF में top 10. Right, yes, no drawing the chart with me. I'll give you time to write later. First you understand. Right, what's a statutory due? Those are examples, okay? An amount which is required to be paid under a statute, under a particular law. You understand? Okay, to whom do you pay it? To the government. Okay, so who has issued CARO? Central government. So they will put a clause for themselves, no? You understand? They will put a clause for themselves. Okay, right. Can you give me examples of statutory dues? Service tax, excise, customs, PF, ESI, VAT. Yes, all these are examples of the statutory dues which are to be paid. Now, all these statutory dues which are to be paid by an entity, company, are prima facie divided under two. One, the undisputed statutory dues, and second, the disputed statutory dues. Undisputed, where there is no dispute. You are saying you have to pay service tax of 30 lakh. Department is also saying we have to receive 30 lakh service tax from you. So there is no dispute regarding the amount payable. And disputed, where the matter is under dispute in the courts of law. They may be in front of the CCIT, DCIT, commissioner, or at the High Court, Supreme Court or so. Yes, now, so our reporting for statutory dues is first divided under two, undisputed and disputed. Now, if you look at the list for undisputed statutory dues, just pay attention. Whether the company is regular in depositing undisputed statutory dues, including Provident Fund, employee state insurance, income tax, sales tax, service tax, duty of customs, duty of excise, value added tax, cess, and any other statutory dues, यानी कि etc, 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 etc. यानी कि for undisputed statutory dues, the list is inclusive. It says and any other statutory dues, no. And now for disputed statutory dues, if you look at the B point, where dues of income tax, sales tax, service tax, customs, duty of excise, or VAT have not been deposited on account of any dispute. Have they written over there and any other statutory dues? Was it written over there for disputed statutory dues? No. That means for disputed statutory dues, the list is exhaustive. Do you understand the first point of observation? Okay. Now we will look into what is the reporting. Right. So first thing, for undisputed statutory dues, you have to do reporting on two things. One, the regularity of payment of the undisputed statutory dues. And second, those undisputed statutory dues which are outstanding outstanding as on the date of the balance sheet for a period of more than 6 months from the date they became payable. Let's try to understand. First thing which you need to report for the undisputed is the regularity of payment. So I am going to ask my company, the client where I am doing the audit, okay, please give me the list of all those statutory dues which you have to pay on a regular basis. See, if it is not to be paid on regular basis, I can't comment on regularity. If it is to be paid once in a year or sometimes you may have to pay, then I can't comment on regularity. So I'll ask them the list of all those undisputed statutory dues which they have to pay on a regular basis. So say example, they say we have 30 such statutory dues. Like you know TDS ही कितने प्रकार के होते हैं? TDS on advertisement, TDS on contract, TDS on professional fees, all 194 section now. So many TDS you have over there. So now 30 statutory dues which they say example need to pay on a monthly basis into 12 months in a year. So 360 challan. So what to do? First year article. Tell him sit down. And by tomorrow evening 360 challans you should check. You understand? All 360 challan, e-payment challan, no? You will have the print advice regarding the payments which have been done on or before the due date. So you know in Excel we have sheets after sheet, 30 sheets in a line. And we have a table for each one of them. Say first sheet is for TDS on contract. So serial number, month, amount deducted, amount collected, amount to be paid, due date, paid on which date, and also the acknowledgement for the payment. Right. So now if it is observed, okay, very good. And like AS, they've always paid their statutory dues on or before the due date. So in this case, as an auditor, what will I do the reporting as? The company is regularly depositing its undisputed statutory dues with the government. Second, what we observe, 320 times they have been regular. But say 40 times there has been a slight delay in the payment of the statutory dues. So now I will say the company has been generally regular in depositing the undisputed statutory dues. And say I observed 200 times they have paid on time, but 160 times there has been a delay. So now I will say the company has not been regularly depositing its undisputed statutory dues with the authorities. So one thing which you need to report in CARO 2016 for undisputed statutory dues is the regularity of payment. How regular is the company in the payment of the undisputed statutory dues? Is it regular? Is it generally regular? Or is it not regular? Do you understand that? Then, second point for undisputed. Now see, it is undisputed. But still it has been more than 6 months that it has been outstanding and it has not been paid by you. Can anybody give me examples of undisputed statutory dues outstanding as on the date of balance sheet for a period of more than 6 months from the date they became payable? Example, can you put some dates and give me an example? Exactly. All statutory dues which are outstanding since or on or before 30th of September of that financial year. Then let it be of how many years also? That's okay. Let it be of last 5 years also. Say example, you know, TDS on advertisement was to be paid by the entity since July 2016. I am doing reporting for which year? Say 31st March 2017. And up to 31st March it has not been paid. So now July, so August, September, October, November, December, January, February, March. 8 months. Is it not outstanding as on the date of balance sheet for a period of more than 6 months from the date it became payable? Yes. And say on the other hand, TDS on contract was to be paid since February 2017. Then will I do the reporting over here? February, March, only one month, no? Not more than 6 months from the date it became payable. The logic of the central government is very simple. It is undisputed. and it's been more than 6 months that you have not paid the amount, means pakka your company is a kingfisher. Liquidity crisis, no, you don't have the money to pay the statutory dues. You don't have the money because it's undisputed. Disputed is a different matter. Here I am talking under undisputed. It's an indication of liquidity crisis in the company. You understand now, the moment the going concern ke first two indicators from where you get, one from the repayment of bank loan and second from the repayment of statutory dues. These are the first two people who, who have to face the consequences of your liquidity problem. One, the repayment of the loans, and second one, the payment of the statutory dues. Are you getting this one? Outstanding as on the date of balance sheet for a period of more than 6 months from the date they became payable. And all statutory dues outstanding on or before 30th of September. So this TDS on advertisement, I had to pay it since July. Did I pay it up to 31st March? No. So does it require reporting in Caro? Yes. But say I paid it on 4th April. Say the company paid it on 4th April and I am reporting on 25th April. You know that. Still, because outstanding as on the date of the balance sheet. So 31st March it was outstanding, no. So you can give a remark later on that subsequently it has been paid. But will you do the reporting of the same? Yes, you will do the reporting of the same. So did you understand the 2 points of reporting for statutory dues? Right, regularity of payment and more than 6 months. And for disputed statutory dues, 2 things to be reported. One, the amount involved. है ना कि कितने अमाउंट का ऑब्वियसली एस्टिमेटेड अमाउंट होगा अगर एग्जैक्ट अमाउंट पता होता तो डिस्प्यूट ही क्यों होता सो ऑब्वियसली दिस इज गोइंग टू बी एन एस्टिमेटेड अमाउंट इन्वॉल्व्ड एंड सेकंड द forum where the dispute is pending. Supreme Court, High Court, CCIT, DCIT, all those authorities are there, which you study in the procedural part in your income tax and direct tax and indirect tax. So the forum where the dispute is pending. And a mere representation to the department does not constitute a dispute. And the company has to go on appeal. You only make a representation to the department. Will that be considered as disputed statutory due? No, the company has to go on appeal. You have to file a counter case. Then it would be considered as a disputed statutory due. Does everybody get that? Okay, right. So what does it say? Here 2 things for undisputed. Regular in depositing and second outstanding as on the last day of the financial year for a period of more than 6 months from the date they became payable. Everybody, are you finding it in your books? Regularity of payment and more than 6 months. And for disputed, the amount involved and the forum where the dispute is pending. And a mere representation to the concerned department shall not be treated as a dispute. Right? So again, as an auditor, what does it say? You have to comment on the regularity. Right, so you have to check only those which is required to be deposited regularly. That is why I told you, all those which they have to pay on a regular basis. Right, whether it's central government, state government, local or foreign government, all should be considered under statutory dues. Then show cause notice come demands and draft assessment orders needs to be evaluated, okay, whether it is disputed or undisputed. Then the forum where the disputes are pending would be given by a broad classification and not by location. Right, so you don't have to give whether it's going on in Mumbai or Chennai or Hyderabad or Kolkata. You just have to give it broadly. Disputed amount should be based on positive action by the company to show that it has not accepted the dues. Mere representation would not be a disputed amount. A reconciliation should be maintained with respect to disclosures under contingent liability and disclosure under this clause. Bhari point, no? Okay, whatever disclosures have been done under contingent liabilities, you should reconcile with that with the disclosures which have been made under clause 7 of CARO 2016 to ensure the completeness. Yes, and a matter as disputed where there is positive evidence or action on the part of the company, that is, it has gone into appeal. And obviously any penalty or interest will also be covered in the amounts payable. Right, so disputed and undisputed. For undisputed, what are the 2 points of reporting? Regularity and more than 6 months. And for disputed, amount involved and the forum. And a mere representation does not constitute a dispute. Okay, just 1 point before you write down. Right, say the company has some 67,000 employees working. Okay, and they have a due date, say for the payment of the provident fund. Okay, now computing the salary of 67,000 employees and then computing the PF contribution and paying it before the due date, it says it's very tedious. It's not possible. क्या होगा? And if we wait for the exact amount of PF contribution, then the due date will lapse. They say if we wait, 67,000 employees ka, let us get the exact amount, and then if we pay, it says we'll cross the due date. That is why the company has a policy of paying a lump sum amount to comply with the requirement of paying on or before the due date. So, on a lump sum basis, say, is contribute some 15 lakh to the provident fund on or before the due date. I'm just giving an example, say 15 lakh. And then next month they came to know, okay, no, their liability, the contribution actually required was 16 lakh. So what they do, that additional 1 lakh, they adjust it in the next month. And this practice continues. Something like the impress system in case of cash. And a petty cash, they maintain the float, and whatever is the balance, they adjust it and they maintain the float amount. So will such lump sum deposit be considered as regular in payment? You understand my question? They can't ascertain the exact amount, that is why they are paying a lump sum amount, and whatever is the excess or deficit, they are adjusting it against the next month. Excess bhi ho sakta hai, deficit bhi ho sakta hai. They adjust it against the next month. Will this be considered as regular in payment? Yes, this will be considered as regular in payment. Yes, the question has been asked in the exams on this one. Right, then, whenever a question is asked in the exams on the statutory dues, statutory dues, one, you need to make a reference to SA 250. Consideration of laws and regulations in an audit of financial statements. Whose responsibility to comply with the laws and regulations? Management's responsibility. We only need to check, right? So management's responsibility. Then it also requires a reference to section 128 of the Companies Act 2013. What is 128? Books of account. And what does it say? When will a company said to be maintaining proper books of account? If they are kept on the accrual basis of accounting. And second, if they, yes, wonderful, if they are kept under the double entry system. So what is important for me over here is accrual basis of accounting. Then after that, I remember one more, section 43B of the Income Tax Act. Yes, certain deductions allowed only on actual payment basis. Deductions allowed only on actual payment basis. So all what you are saying, bonus and all those. Yes, actual payment basis. And then after that, I also make a reference to clause 7 of para 3 of Caro 2016. Do you get that? So this is again Jagu Ghumiya. You understand? You have to go to all of these. You understand? SA 250, section 128, section 43B and clause 7 of para 3 of Caro 2016. Clause 7 here, no? Huh. Statutory dues. Right? Write down. Generally, regularly depositing and not regularly depositing. No. But then companies suo moto on their own, the auditors they do report on these additional matters also. And still it's disputed, but then still it is also more than 6 months. So you can put it under undisputed. And if it's not yet gone on appeal, so it won't be under dispute. So you need to check whether the reporting will happen under more than 6 months. And if it doesn't come into the category of more than 6 months also, then no reporting. It is disputed, and then you will not do the reporting. But generally what we have seen, okay, जैसे fringe benefit tax is not there in the list of disputed. But still we have seen that auditors have reported in companies even for those which are not there in the list. Done everyone? Have you written? Clause 7, statutory dues. Written? Okay. Right, so this is regularly, generally regularly, and not regularly. Still writing? Okay. No problem. Yes, and lump sum payment, will that be considered as regularly depositing? Yes, lump sum deposit will be considered as regularly depositing the undisputed statutory dues. Right, and then have you copied down these references for the case studies? Yes, done? Right, okay. Right, so now this is the audit report of Kingfisher. So obviously now the clause numbers are different, but you don't need to refer to those. We just need to see the reporting. Right, so it says now it is clause 7, earlier it was clause 9. Okay, what does it say? Undisputed statutory dues in respect of service tax, withholding taxes, fringe benefit tax, dues and professional tax have not been regularly deposited with the authorities. And not been regularly deposited. And others it says have generally been regularly deposited with the appropriate authorities barring delays in certain months. Right, then more than 6 months. So it says no amounts were outstanding for EPF, ESI, Invest Education, Wealth Tax, Sales Tax, which were paid for a period of more than 6 months. And undisputed amounts payable in respect of TDS of 62,000 lakh, service tax of 7,000 lakh, professional tax of 44 lakh, FBT of 55 lakh, gratuity of 410 lakh were outstanding for a period of more than 6 months from the date they became payable. Right, so 62,000 lakh TDS, outstanding for a period of more than 6 months from the date they became payable. Are you getting that? Right, and then the disputed statutory dues, the estimated amount and the forum where it is pending. The amount involved and the forum, right? So Supreme Court, Commissioner of Income Tax, then Custom Excise and Service Tax Appellate Tribunal, right? So that is what. Right, so amount involved and the forum where the dispute is pending. Are you getting that? Right, so that's the reporting for the statutory dues. Right, that's the reporting for the statutory dues. Right, come to the question bank. Right, we've already seen up to question number 8. Now let's come to question number 9. X Limited closed its manufacturing operations and sold all its manufacturing fixed assets during the year 2013. However, it intends to continue its operations as a trading company. In respect of the other fixed assets, the company carried out a physical verification and found a material discrepancy to the tune of 1 lakh, which was written off and is disclosed separately in the profit and loss account. Kindly incorporate the above in your report. So one, what does it say? Sold all its manufacturing fixed assets. So material uncertainty related to going concern. Do you understand? Sold. But it intends to continue operations as a trading company. So though there are adequate management plans. Do you remember SA 570? Material uncertainty related to going concern. But also what are the management plans? I had given you the example of Phoenix Mill and Phoenix Mall. Okay, though there was a material uncertainty, but there were mitigating management plans. So here it says though there is an uncertainty, but there is a management plan. And second, material discrepancy. Now old Caro also had a point regarding whether substantial part of fixed assets has been disposed of during the year, whether it has affected the going concern. Now that point has been removed from fixed assets. So now what is the point for fixed assets which we have over here? Material discrepancy noticed on physical verification, whether it has been properly dealt with in the books of accounts. Right, so again as per SA 570, going concern. When the auditor concludes that the use of going concern assumption is appropriate, but a material uncertainty exists. I told you, key term in SA 570, appropriateness and material uncertainty. Adequately describe the events or conditions that may cast a significant doubt on the entity's ability to continue as a going concern, and also disclose clearly that there is an uncertainty. The auditor is further required to specifically include certain matters as per Caro 2016, where the fixed assets have been physically verified at reasonable intervals and discrepancies have been properly dealt with. Then in the given case, whatever has happened. Are you getting? They've made a reference to SA 570 and then also clause 1 of Caro 2016. Right, so the paragraph in the audit report. Okay, as per AS1, the entity is viewed as a going concern. Next page I'm reading. That is as continuing operation for the foreseeable future. It is assumed that the enterprise has neither the intention nor the necessity of liquidation or of curtailing materially the scale of its operation. And though it has sold off its assets, it's going concern in the form of a trading company. And material discrepancy has been properly dealt with in the books of accounts. Are you getting that? Next one. Physical verification of only 50% of value in items of inventory has been conducted. The balance 50% will be conducted in the next year. यानी कि physical verification has not been conducted at reasonable interval, because for inventory it is once in a year. For fixed asset it was once in 3 years. So in the given case, the above requirement of CARO has not been fulfilled, and as such the auditor should point out the areas where he believes that the inventory verification is not reasonable. He should also consider the impact on financial statements. Question number 3, 11. ABC Private Limited is a manufacturer of jewellery. A senior employee of the company informed you that the company does not properly disclose the purity of gold used on the jewellery. यानी कि वो जो हॉलमार्क का सर्टिफिकेशन होता है, या that 99K, 92K which is there on the gold is not there on their gold. The purity of gold is not mentioned on the jewellery. Yes, the purity of gold is not mentioned on the jewellery. So one, it says now this purity, what does it say? That is not an aspect which is covered under CARO. CARO is only talking about the physical verification at reasonable intervals. Then if you look at it from the viewpoint of fraud also, there is no fraud as far as they are billing the customer with the right amount, but they are not only mentioning the purity. And one thing it may affect is it may affect the valuation of inventory. But valuation of inventory is not dealt by CARO. Hence, no reporting is necessary for non-proper disclosure of purity of gold on the jewellery. Because neither does it come under inventory, nor does it come under fraud. You understand? Nor does it come under inventory, nor does it come under fraud. Yes? Next one. Zik Private Limited. Question number 12. Has granted a loan of 20 crore to its associate ZEC Private Limited at the beginning of the year, and it remains outstanding at the end of the year. How the auditor should report the facts? So this is what? Loan to 189 parties. Right? Loans to section 189 parties. Yes? Clause 3. Then, now what does it say? First, as per AS 18. So everywhere you have to see what are the references that they are making. First one, fixed assets ke wahan they made a reference of 570. Then after now that for these loans, first they are referring to AS 18. Related party disclosures. Related party transaction means a transfer of resources or obligation between the related parties, regardless of whether or not a price is charged. Right? Regarding a related party transaction, the following should be disclosed, and they've given the 7 points of disclosure. Then after that, what they say? Additionally, next page I am reading now. The auditor is required to report on certain matters specified under para 3 of CARO 2016 under section 143(11) of the Companies Act. As per clause 3, if the company has granted any loan, then whether the terms and condition, then the receipt of principal and interest, and now overdue is not more than 1 lakh. Now what is the new requirement? If overdue amount is more than 90 days. What is the amount which has been overdue for more than 90 days? So instead of 1 lakh, you write down over there 90 days. In your books where it has been written 1 lakh, है ना, 5th, 6th line from नीचे, there instead of 1 lakh, you will write down now 90 days. Then whether reasonable steps have been taken for the recovery. Is everybody understanding what I am telling you? You understand? So instead of 1 lakh, you're going to write over there 90 days. And further, as per SA 550 on related parties. Yes, which prescribes the auditor's responsibility and audit procedures regarding related party. Therefore, the auditor should insist to make proper disclosure as per the AS and report as per CARO 2016. So they say do the disclosures as per the accounting standard and also the reporting under clause 3 of CARO 2016. Then question number 13. Discuss the reporting requirements under CARO where a company has defaulted in compliance with section 73 to 76. So you have to write down clause 5, deposits from public. Next one, the chief accountant of a public company contends that auditor need not report on the defaults by the company in the repayment of deposits. No, you have to do the reporting under clause 5, deposits from public. Next one, question number 15. Under CARO, an auditor is required to report on the regularity of payment of PF and ESI. Give alternative drafts of the report. Can you tell me the alternative drafts of the report? Regularly depositing, generally regularly depositing, and not regularly depositing, not been regularly depositing. So they've asked you the alternative drafts of the report. Regarding the regularity of payment, R, GR and NR. You know R, GR and NR? Regularly, generally, regularly and not irregularly. Is everybody getting? Right. Then after that, next question, lump sum deposit. What did I tell you? Lump sum deposit, will that be considered as regular in payment? Yes, that will be considered as regular in payment. Next one, question number 17. During the course of audit of CT Limited for the financial year 14-15, it has been noticed that 2 lakh of employee contribution and 9.5 lakh of employer contribution towards ESI have been accounted in the books in the respective heads. Whereas it was found that only 4 lakh has been deposited with the department. Right, so what does it say? So how much was to be paid? 11.5. How much have they paid? Only 4 lakhs. So what we'll say, they are not regularly depositing the undisputed statutory dues. The finance manager informed the auditor that due to financial crunch, they have not deposited the amount, but they will deposit the amount along with interest as and when the position improves. Comment as a statutory auditor. So this question was also asked in May 2016, recent past. So 4, 8, 16, 32. You understand? No. May 2004, May 2008, May 2016. I'm not saying anything further. Okay, right. Okay, so this is that answer where those 4 references are required. I told you, as per SA 250. It is the responsibility of the management with the oversight of TCWG. A language you have to develop over a period of time. To ensure that the entity's operations are conducted in accordance with the provisions of laws and regulation, including compliance with the provisions of laws and regulation that determine the reported amounts and disclosures. The auditor is responsible for obtaining a reasonable assurance. Oh my God, they are going to 200 also. Taken as a whole, that are free from material misstatement, whether due to fraud or error. In conducting an audit, the auditor takes into account the legal regulatory framework. Owing to the inherent limitations of an audit, there is an unavoidable risk. Do you remember something like that? That some material misstatements may not be detected, even though if the audit has been planned and performed in accordance with the standards. If the auditor concludes that non-compliance has a material effect on the financial statements and has not been adequately reflected in the financial statements, he shall express a qualified or an adverse opinion. So 200 and 705 also. Okay, further as per section 128 of the Companies Act, a company has to maintain proper books of account on accrual basis and according to the double entry system. Additionally, as per section 43B of the Income Tax Act, there are certain expenses which include any sum payable as an employer by way of contribution to PF, which are allowed only on actual payment. The auditor is also required to report under clause 7A of para 3 of CARO 2016, whether the company is regular in depositing undisputed statutory dues and those which are outstanding for more than 6 months. The auditor should disclose the fact in his report. Yes, do you get that? So this is that answer, no, where we had those 4 references, SA 250, then after that section 128, then section 43B, and then last one, clause 7A of para 3 of CARO 2016. Next one, read question number 18. Yes, RTP May 5th, 14, 13, and also November 16, and 5 marks November 2011. XYZ Private Limited, read. 125 lakh, appeal is pending before the Honorable ITAT. So disputed statutory due, amount involved and the forum. And customs duty 85 lakh, demand notice received but no action has been taken to pay or appeal. So it's not disputed, undisputed, but 15 September, yani ki on or before 30th of September, so more than 6 months. That is why the reporting will come under more than 6 months. Is everybody getting that? 15 September. So again, what does it say? As per SA 250, then again SA 200, then after that, again they talk about qualified material effect, qualified or adverse opinion. Right? So 250, 200, 705. Did you find it? 250, 200 and 705. Then after that the reporting in Caro. Then they have also made a reference to next page AS 29. Yes, provisions contingent liabilities, right, may be disclosed. Further, it should be brought to the notice of the members by reporting. Additionally, the demand notice received and is outstanding for which no action has been taken. Therefore, it should be brought to the notice of the members by reporting. Next one, question number 19. Big and Small Limited received a show cause notice in December from the Central Excise Department intending to levy a sum of 25 lakh. The company replied to the above notice in January contending that it is not liable to the proposed levy. No further action was initiated up to the finalization of the 2015. As an auditor, how would you deal with this matter in your report? Yes, how would you deal with this matter in the report? Right, what does it say? December 2014, and it is not yet gone into appeal. So it is not more, and so it is not disputed. Then it is also not more than 6 months also, because it's after 30th of September. So though there will be no reporting under Caro, but there will be a reporting under contingent liabilities, no? In the financial statements, in the notes to account under contingent liabilities, you will do the reporting. Right, so as per SA 250, then after that as per AS 29. Yes, future events that may affect the amount required to settle an obligation should be reflected in the amount as a provision where there is sufficient objective evidence that the event will occur. The auditor should also report the amount of dues not deposited on account of dispute and the forum where the dispute is pending in his report. If the management does not accept the request, the auditor should qualify the report accordingly or vice versa. Yes, but what we can also interpret over here is that the company, what does it say? Contending no further action was initiated by the Central Excise Department. But has the company replied to the above notice? Yes, so the company has gone into appeal, no? Yes, has the company gone into appeal? Okay, so that's what, that could be a ground, you know, where you could say, okay, replied to the above notice could be considered as that they've not gone into appeal. But anyways, if then you consider it to be not a disputed statutory due, but it is not coming into the category of more than 6 months also. But still in that case, you will report in contingent liability in the notes to account. Yes, and if you consider replied to be taken as that has gone on appeal, then in that case, it will come under disputed statutory dues. Okay. Right, so question number 19. Yes, next one, question number 20, the last one for clause 7. As the auditor of PQRS, what steps would you take to ensure compliance in respect of the following matter? Regular in depositing and more than 6 months. So again, you have to write down what are the audit procedures you will follow. The auditor has to report upon the regularity. If not regular, then the arrears of statutory dues. Payment includes interest penalty also. Take a written representation for more than 6 months also. Right, so you have to write down again the auditor chashma, okay, what are the audit procedures to be followed. Right, so we have seen a lot of questions in the exam, specifically from clause 7 of para 3 of Caro 2016, which is regarding the statutory dues. Right, which is regarding the statutory dues. Then after clause 7, we have clause 8, which is regarding the repayment of dues. Yes, clause 8. What is clause 7? Statutory dues. What is clause 8? Repayment of dues. Whether the company has made any default in the repayment of dues to banks, financial institutions, new entry over there, government. Old Caro, the government was not there. This has come in 2016 Caro. Banks, financial institutions, government and debenture holders. Whether the company has made any default in the repayment of dues to banks, financial institutions, government, debenture holders. If yes, they have made a default, then the period and the amount of default is to be reported. then the period and the amount. So it could be even a one-day default, you know. 30th March was the due date, and up to 31st March you did not pay. So even one-day default will be reported over here. And what does it say? If the default is in the repayment to banks, financial institutions, and government. This is again a new entry in CARO 2016. Lender-wise details are to be provided. And lender-wise details. Obviously, thankfully for debentures, they know it's not practical to give lender-wise details of all the debenture holders. So that is why for bank, financial institutions and government, they've said if there is a default, then lender-wise details are to be provided. So whether the company is repaying its bank loan on time or no, that is also now requiring reporting under CARO. And you know, even now under Schedule 3 to the Companies Act, you have to give the default in the repayment of dues. This is also a reporting requirement under Schedule 3 in the notes. And a default in the repayment of dues. So it is going to come in financial statements also in the notes to account. And it is also going to come in CARO ka clause 8. Whether the company has made any default. So for banks, financial institutions and government, you are going to obtain a copy of the agreement. And you are also going to check the repayment schedule. You are going to check the due dates, whether the payments have been made on or before the due date. And for debenture holders, you are going to check the debenture trust deed. Yes, you are going to check the debenture trust deed, wherein the due date for the redemption of debentures would be mentioned. Right? And when would you say there is a default? If it has not been paid on or before the due date. In that case, you will say that there is a default. So what does it say? If there is a default, whether the company has made any default in the repayment of dues to banks, financial institutions, government debenture holders. If yes, the period and amount of default, and in case of banks, financial institutions and government, lender-wise details are also to be provided. Okay, right. So now what will happen in Infosys ka report? In the new report, I don't have the new one over here, but the new report mein kaise aayega? Those 17 banks from which they had taken a loan and they failed to repay the loan, lender-wise detail, and in that State Bank of India sabse upar. You understand? No, lender-wise details are to be given. Bank-wise and lender-wise details are to be given. And if you look at their old report, 2012-13 report, what does it say? Based on our audit procedures and as per the information explanation given to us, the company has defaulted. Are you seeing? In the repayment of loans and interest to banks and financial institutions. Estimated unpaid overdue interest and installment to banks institutions aggregated to 284,538 lakh. 2 lakh. Lakho mein ek hai. You understand? 284,538 lakh. And the overdue relates to 11-12 and 12-13. You understand? And abhi to kya understand? और अब तो इसमें और क्या आने वाला है आगे? Lender-wise details to be provided. यानी कि हर एक बैंक का नाम देना पड़ेगा. All the 17 banks from which they have taken a loan, lender-wise details are to be provided. Right. Does government include foreign government? Shh. Government, does it include foreign government? I've taken a loan from foreign government, I don't repay. Will it be reported under CARO? Does it include government company? Does it include public sector undertakings? No, it only means central government, state government and the departments of the government. It does not include public sector undertaking, public sector undertakings, foreign companies, foreign government or government companies or the like. Okay, right. So what does it say? Okay. Defaulted in the repayment of dues to banks, financial institutions, debenture holders. If yes, the period and amount of default is to be reported. And in case of defaults to banks, financial institutions and government, lender-wise details are to be provided. So what does it say? It is clarified that the auditor should report the period and amount of default irrespective of when they occurred. So I told you it could be a one-day default, it could be a 10-year default. The term government means central government, state government, union territory and its department. Government does not include government, company, public sector undertaking, boards, authorities, corporations and foreign government. So you mind it. Government means only central government, state government, departments, union territory. Right, should obtain a schedule of repayments. Obtain the confirmations from the concerned bank. If they have applied for a restructuring reschedulement, does not mean that no default has been occurred. Even in that case, you will do the reporting. So even though if they've gone for a CDR, a corporate debt restructuring, abhi to default hai hi na. Aage jaake they've got a new schedule for repayment. But as of now, the status is that there is a default. And obviously, what does it say? Lender-wise details are to be provided only for banks, financial institutions and government and not in respect of the individual debenture holders. Right, so defaulted in the repayment of dues to banks, financial institutions, government, new entry and debenture holders. If yes, the period and amount of default is to be reported. And second, what does it say? If the default is in the payment of banks, financial institutions, government, lender-wise details. So what are the two new entries over there? Yes, government and second one the lender-wise details. Lender-wise details are to be provided and upar what is the new thing? Government has also now been added into the list. So clause 8, what does it say? Okay, whatever loans, example I am saying, okay, whatever loans you have taken from the bank, are you repaying them on or before the due date? Now what does clause 9 say? Okay, what had you told the bank when the bank asked you why are you taking a loan? You said that we want to buy a plant and machinery. Now clause 9 you have to report whether the loans have been applied for the purpose for which they have been obtained. And they are not talking about loans only. Loans I just said as an example. Right? What is clause 9? End use of monies raised. What is clause 9? End use of monies raised. So what are the ways in which a company can raise money? IPO, yes, shares. FPO, further public offer. It says including debt instruments. Including debt instruments and any term loans. Whether any money has been raised by initial public offer, further public offer, including debt instruments and term loans, whether they have been applied for the purpose for which they have been obtained. And if not, then you have to give the details of the delays and the defaults. Okay, you had said by 30th of November we will buy the plant and machinery. You did not buy by 30th of November, so that's a delay. And second, what you said, okay, by this money we are going to buy plant and machinery. What you did, you put all that money into mutual fund. Why you put it into mutual fund? Because it's going to take time to get the machinery. The order is getting delayed. So why keep the funds idle? No, you thought let me park them in a mutual fund. So then in that case what they say, subsequent rectification. My God, new entry in Caro again. Subsequent rectification if any. So what you said, you have to raise the money for what? Say purchase of plant and machinery. What happened? It took time to purchase the plant and machinery. So temporarily you park them into mutual fund. So that's a default. So then what does it say? Subsequent rectification if any. So where any monies have been raised by initial public offer, further public offer, including debt instruments and term loans from banks, financial institutions, whether they have been applied for the purpose for which they have been obtained. Okay. Now, what does it say? For IPO, FPO, where will I get the proposed use from? For IPO, FPO, where will I get the proposed use from? The prospectus, the offer documents. I will get the proposed use from the offer documents, mainly the prospectus. And for the term loans, where will I get the proposed use from? Right, the loan agreement. And I will get it from the loan agreement. And generally banks, so what they do? If you say you want a loan for purchase of plant and machinery, they will keep that plant and machinery only as a security. You understand? And once that loan amount is settled, then it will be transferred in your name. So this is the proposed use. And then what you need to check is the actual use. Actual use from where will you check in both the cases? From the books of account, and then accordingly you will do the reporting under clause 9. So this is the auditor chashma, and a proposed use and the actual use. The proposed use and the actual use. And what are the two D's? Delays and defaults. And then SR, subsequent rectification if any. So delay ho gaya. You had said you will purchase by 30th of November. You didn't purchase, so delay. Or you said you will purchase plant and machinery. You put it in mutual fund. Or you gave bonus to all your employees. So that's a default. And then subsequent rectification has been done for the same. What does it say? Subsequent rectification. Very important over here, proposed use and actual use. And old caro ke times pe the question used to come that the company has taken a loan from the bank to purchase the research and development equipment. However, out of the loan amount, they have purchased a car for the research and development manager. Why had they taken a loan? For purchase of research and development equipment. What they did, they got a car for the research and development manager. If you wanted to buy a car, you should have taken a car loan. Why did you take an equipment loan? So that is again over here, clause 9, end use of monies raised. But pehle kya tha na, old caro, like caro 2003, we had two clauses. End use of borrowings, end use of issue proceeds. Ab kya kar diya, dono ko ek saath dal diya, end use of monies raised. Are you getting now? Earlier there was end use of borrowings and end use of issue proceeds. Now what? All have been put together. Right. So what does clause 9 say? Whether money is raised by IPO, FPO, initial public offer or a further public offer, including debt instruments and term loans have been applied for the purpose for which they have been raised. If not, the details together with the delays or the defaults and subsequent rectification, if any, as may be applicable to be reported. You understand? Delays and the defaults with subsequent rectification, if any. So an examination of the offer document. Then the auditor should verify the amount of end use as disclosed in the financial statement. So I have written books of account. Then since offer for sale of specified securities to the public by any existing holder does not result in any monies raised, the SEM is outside the purview. So offer for sale, equity shares and convertible securities. Then definition of public offer raised from foreign capital markets and also GDR and ADR's issues will not fall within the scope of this clause. So GDR, ADR will not come over here. And term loans are generally acquired for acquisition of capital asset, which then becomes the security for the loan. So generally I told you, if you take a loan for purchase of plant and machinery, that is only kept, that plant is only kept, machinery is only kept as a security. So end use of funds is normally fixed. And then what does it say? Also have to be examined. Term loans obtained from entities and persons other than banks and financial institutions, because it does not specify banks and financial institutions. Over here you have to check the actual utilization of the loan. And then nature of the fund, any IPO, FPO or term loan. Details of the default amount and how it has been subsequently rectified. Right, so that is clause 8 is what? Are you repaying your loans on time? Clause 9, are you using the loans for the purpose which you had taken it? Right, so we'll take a break and then continue.